Hello, traders. It is Sunday morning, February 2nd. We are going to have some really big news hitting tomorrow morning, Monday. The tariffs are going to be implemented on Tuesday, and this is going to have a huge market impact. We've got so many people. If you look at YouTube, there are tons of videos on the tariffs right now. Everybody's freaking out about them like they haven't even been discussed. This has been on the table for the last 2 months. This has been on the table since Trump won the election. So this should not be any surprise to any of you. So I'm going to go over how I believe the tariffs are going to impact trading on Monday. I'm going to show you some trade ideas that I think are going to work with a specific pick and the price action that I'm going to be looking for. But before we get into that, I'd like to take a look at my most recent pick. If you look at the video a week ago, we did the JP Morgan Chase straddle. So we bought that straddle. I had shown you on my Thursday interview how I legged into the spread and how I legged out of the spread. Awesome trade. I ended up making 50% on that trade, and I didn't even have to hold it over the actual FOMC statement. We had a ton of news that came out this week. My God, we had the FOMC statement. We had GDP came out. We had earnings from Microsoft, Meta, Apple, Tesla. Lots of the mega cap tech companies had announced earnings. Tesla was one that I really liked, and that's the stock that I featured. And so, with tariffs in mind, please watch my video from Thursday. I am completely aware of the tariff situation. Tesla manufactures cars in the US and they manufacture cars in China. So I believe that they will be able to circumvent any kind of tariff issues. So we've got this really nice support level that's formed on Tesla. Let's call it the 375 level as far as horizontal support. We have the 50-day moving average also providing support. And we have a VWAP-E down here around the 365 level. So what we did on Thursday was we sold the February 14th, the Valentine's Day, 365 puts, and we bought the 360 puts, and we did that for a $1 credit. So in all likelihood, that spread is going to expire worthless, and we will make a 25% return on that trade. Really nice for a 2-week position. Now, I know that we're going to take some heat on this because I'm expecting the market to open considerably lower on Monday. In fact, this could get quite ugly. What does it mean to my Tesla spread? Am I going to be panicking on it? No, not really. I put the spread on because I liked the macro backdrop for the stock. I don't think they're going to be impacted that much by the tariffs. Could they be impacted by an overall market drop? Yes, absolutely they could be. So I think that they're going to weather the storm. I've got plenty of distance. Look, the stock closed at 405 on Friday. So we are 40 points out of the money. This stock can drop 10% in the next 2 weeks. And if it falls less than that, we're going to keep our 25% based on the credit we received. So there's 5 points between the strike prices. We received a $1 credit. Our margin requirement is $4. Our maximum risk is $4. 1 divided by 4 is 25%. So that's how the trade is lining up. I still love it. When the market sold off hard on Friday, look what the stock did. It basically closed right where it was the prior day on that earnings announcement. Put up the 15-minute chart, and you can see, yeah, sure, Tesla pulled back a little bit, but it's still finished higher than the open for the day. That's the kind of price action I want to see. It has relative strength. So I'm not going to panic about this, and I am positioned for a big move Monday morning. So let me put up the chat room so that you can see. At 2:28, which was a half an hour before the close Friday, I shorted ES at 60.65, planning on holding it over the weekend, and I also did a couple of spreads. I did one spread, but I did it in pretty decent size. So I bought the $600 puts on the SPY expiring on Monday. So went very, very short term with it, and I sold the 595 puts. I did that for $1.25 debit. I went close to the money on that because I felt that the move over the weekend could really manifest, especially if other countries started to chime in. Oh, you're going to put tariffs on my country? I'm going to put tariffs on your country. That's how all of this rhetoric escalates. So I'm looking for a big move down Monday morning on the open. S&P futures have not opened Sunday night, so I don't know that this is going to actually materialize or happen. I'm positioned for it for sure. And China's market has actually been closed because of the Chinese New Year. So they're going to come back from holiday. They're going to have plenty to say. I've read a couple of headlines here and there that they're talking about putting stiff tariffs on U.S. goods. They're also talking, and I believe they've already banned exporting rare earth minerals to the U.S. This is a couple of months ago already. They are also purchasing their energy, their oil and gas from other countries. They are purchasing their crops from Brazil. So even before Trump has taken office, the Chinese have been busy. They have also been shipping as many goods into the U.S. as they possibly can in anticipation of these tariffs. So everybody else is prepared for this. If this news is catching you off guard, you've got to ask yourself why. Everybody else has been preparing for it. The news has been out there constantly. I've been telling all of you for the last month and a half that when Trump takes office, we are going to have uncertainty and we're going to have volatility. How do we know that? Because that's what's happened previously. When he says he's going to do something, he does it. He doesn't mince words. He follows through with action. And so that's what we're really going to be talking about today, is we're going to be talking about how this administration is going to move the market based on what I've seen in the past. Now, I've got to get a little bit political here, and I'm not judging the policies one way or the other. I'm trying to identify what his behavior is and why he's motivated to do certain things. That's ultimately what we're trying to do when we read price action. Okay, these little red and green rectangles on a chart, they are telling us how motivated buyers and sellers are. So we are trying to learn what their behavior is right here and right now. So when I look at what's motivated Trump, obviously he wants the borders closed. And he's been extremely vocal about that during his whole campaign, and particularly once he got elected. And I believe that he was sending Canada and Mexico. By the way, Canadians, Mexicans, I love your countries. I have been there dozens of times. So no ill will there. I'm just trying to analyze Trump's behavior right now. And so what he wants changed is he wants the borders closed. And he wants fentanyl to stop coming into this country. And those are the primary reasons that he's gone with a 25% tariff on both countries. Well, how do you know this, Pete? I know it because that's been part of his speech all along. And he wants the drugs out of the country. And Canada and Mexico had 2 months to make steady progress toward that end. And Trump's the kind of guy that when he says something, he wants to see action. Before he even took office, He wanted to see Mexico clamp down on that border, and they didn't. The Mexican president said, if you raise tariffs on us, then we're just going to raise tariffs on you. And by the way, instead of blaming Mexico for all of your problems and your drug abuse, why don't you do some self-reflection and lower the demand for fentanyl? When I read this, I commented about it, and I said, this is exactly the kind of commentary that is going to fuel Trump's fire. He is going to hate hearing that type of resistance. So that makes him even more certain to implement these tariffs. And, he had Justin Trudeau down to Mar-a-Lago and basically de-pantsed him and said, why don't I just call you Governor Trudeau and you can just become our 51st state. It didn't go over well with him. And so obviously there was going to be plenty of angst. But in the end, what he really wanted to see was that Canada would clamp down on their borders and stop illegal immigration, and that Mexico would do the same over those 2 months. He didn't see any of that. So now he's pissed. And now he is implementing those tariffs for sure. Is there a chance that if both countries do what he's asking, that he will ease back? Absolutely, for sure, especially for Canada. And their problem is probably not, I know it's not nearly as big as the problem facing us in Mexico. So I think when it comes to the port of entries in Canada and controlling the people that come in to Canada and that come across the border, clamping that down, I think could go a long way. And I think that a lot of these issues will be resolved because the United States depends on Canada for a lot of raw materials, for energy, for electricity. So there's no reason that that should become an embroiled battle, in my opinion. Mexico's a bit of a different story because their president has been much more resistant. The cartels are running rampant in Mexico. The border has been absolutely wide open, with Mexico really doing nothing to help control the issue. We've put tariffs on Mexico previously, and during a previous administration, when Trump said, you need to close the border down and you need to do it now because I'm going to start increasing your tariffs by 5% a week, instantly Mexico sent a contingent to Washington and they put 20,000 troops on their northern border and they put 5,000 or 6,000 troops on their southern border instantly. Okay, tariffs averted. Trump's happy. They've done what he asked. And so now this has been able to fester for a long time. And during the last 4 years, China has also been investing in Mexico and building plants there so that they can manufacture the goods in Mexico and then transport them over the border under USMCA and avoid paying the tariffs that could be imposed on China itself. So it's going to be a dicey situation. Trump, in my opinion, is using the tariffs first and foremost as a weapon to get what he wants. And what he really wants is he wants illegal immigration to stop. He wants fentanyl to stop coming into this country. And if there can be improvement on both ends of that equation, I think things are going to settle down pretty quickly. With regards to China, there's a 10% tariff going on their goods. We'll see how all of that plays out because Trump's going to be posturing for strength. He has issues with Panama and China's presence in Panama. So I think that's going to be a little bit more difficult situation to resolve. When it comes to Monday morning, what's going to happen with the market? We are going to sell off hard. Period. Well, how could anyone have predicted that? I've been telling you for the last 2 months, the market is priced for perfection. Okay? And there are so many issues that are starting to boil up that this backdrop is anything but perfect. And we can go back and look at the year-end rally in November and December. This was our year-end rally. This was absolute garbage. We barely even made a new high. It was a marginal new high. The volume has been absolutely atrocious. We've got a president coming into office who has already promised tariffs. He's going to basically try and gut Washington, D.C. and drain the swamp. According to his own statements, he's got control of the Senate, he has control of the House, he has control of the Supreme Court, and he has 4 years of experience and 4 years of observation. When he's been able to put his game plan together, he's getting his own cabinet together of people who are loyal to him. This guy is going to strike, and he's going to strike hard. The first day he was in office, I don't know how many executive orders he signed. So what he says he's going to do, he is going to do. You should not doubt it. And last week, I was very firm in telling all of you these tariffs are in place. I listened to his press conferences. Yes, we're starting them February 1st. Yes, we're starting them February 1st. Even Friday, they asked him again, are you still going to go through with the tariff? Yes, I'm going to start them February 1st. And so Friday afternoon is when we started to get this big market decline right in here. So early in the day, I'd mentioned to everyone in the chat room, I'm going to be inclined to fade the first move if it's wimpy, because I'm not looking for a big market move overall today. Well, the first move was higher, and you can see the mixed overlapping candles. Then we pulled back to VWAP. There's still nothing in here that says danger, danger, danger. I mean, the overall picture on a D1 basis, yes, you should have been sidelined with any swing trades. As far as day trading, we get this nice little bounce off of VWAP. This was a head fake, a lower high double top, so the market can't recover. This was not a strong move. Okay, mixed overlapping candles on crappy little volume. So this can easily be reversed. We're just wanting confirmation that the high is in. We get it here with this double top lower high. These are just tiny little awful candles. So there's still nothing good in here to really sink your teeth into. Blam! Long red candle. Do we short that? No, we need to make sure that it's not a solo, that it's not a head fake. So the next candle tries to recover about half of it, and it doesn't get past the halfway point. It doesn't even come close to getting to VWAP. Yes, that is where you take a short. Now you've got a couple of really nice long red candles on what? Massive volume. Not this wimpy dink little pissant volume in here and in here. Look at how this stands out. And by the end of the day, you can see it clearly. This is some heavy, sustained volume that we have not seen in weeks. This move is going to continue. So you get another meager little bounce that tries to retrace half of this long red candle. Can't get through it. This is where you take your next short when you break down below the close of that long red candle. So you've got a position and you've got an add. And now you've got huge follow through and confirmation into the close. And if you're looking for on a swing basis for a position, you got all the evidence you need. Hey, Trump is going to go through with that tariff thing after all. He just confirmed it an hour before the close. So this is a really nice shorting opportunity. And the volume is telling us that the big money is starting to hedge their positions, maybe take some short future positions. But now that everybody's had a chance to assess the news over the course of Friday and Saturday and Sunday, I'm sure everyone's clamoring, this is awful, this is going to ruin the world, this is going to ruin the world economy, oh my God, what's happening? What's happening is that the tariffs are going to be cited as the blame for everything that's going to be happening through the course of Monday, the week, the next month. The truth is that we've had some real issues on a global basis as far as growth. China's GDP growth, they're reporting it at 5.3%. Are you kidding me? It's not even close to that. From sources that I use, they think that at best they might be above 0% growth, but certainly not anything higher than that. And if China's going to start imposing all sorts of tariffs on US goods, there's no demand in China right now. People are clamping down on their expenses in such a big way. And I fear that China could be on the precipice of a financial crisis. I really believe that. I've watched it brew and brew and brew, and that's how these things work, and they smolder. And when you start getting provinces that are running out of money that can no longer pay workers, the whole thing starts to implode. So very conscious of that. Europe, on a real basis, so GDP less inflation is a real basis. On a real basis, Europe has not grown in the last year and a half plus. There is no post-COVID rally. So I'm not seeing global growth anywhere, and you know that that's been a concern of mine. So yes, you start adding other uncertainty to that picture. You start adding interest rates are going to be higher for longer because the Fed does not want to ease. Okay, home inventories at highs we haven't seen since 2007. If you watch my videos, you will already be armed with this information, along with the knowledge that forward PE ratios on the S&P 500 have not been this high since the 2000 tech bubble. Okay, so tariffs are going to be the reason, the catalyst for the sell-off, but all the other stuff that's been out there is pretty crappy to start with. So this is just kind of what moves that ball forward. And we can see it in the price action, as I mentioned in December. Then you get your FOMC statement here. The market starts spending more and more time below the 50-day moving average. Here you get this bounce, okay? Very typical. Bull markets die hard. You get this wimpiest little move higher post-inauguration rally with gappy little tiny candles on minuscule volume. So we know that this can be stripped away easily. And then Friday, you get another test of the high. This is a lower high double top with the market closing on its low. I believe we're going to see a drop, perhaps even down to the 100-day moving average Monday. In one day, it drops 120 S&P points. Yes, I believe that is very likely. So we're going to look for a couple of positions that are going to perform well. And if that 100-day moving average is taken out with ease, we're probably going to test the 200-day moving average. That's how it's going to work. So you can expect some fairly stubborn price action. We get a big drop on Monday. Tuesday's probably going to be a nothing burger because that's what happens after we have a big move in the market. Big move one day, nothing happens the other day. Everybody's digesting the news, and then you have a chance for follow-through selling. So it's very, very rare to get back-to-back really big down days. So if you get that big down day here and you were short on Friday and you carried that over the weekend, you get this big drop down to the 100-day moving average. Yeah, I would probably take gains. on the notion that you're not going to get a big day on Tuesday that's going to follow through. You might even get a little bit of a bounce, and you'll have a chance to reload your short positions. And then based on this bounce off the 100-day moving average, if it's very meager and the market can't get any lift, and if the rhetoric continues to be super sour globally, and the trade war seems to be escalating, you're going to see that next leg lower. And you can re-enter your shorts when we have a nice, crisp, clean, boom, gap below that 100-day moving average. And then you're going to get some acceleration. And the way that moves lower happen in the market is you're going to get this big, swift move lower, like in here. This is a 10% move, and then you're going to get a bounce off of it. Everybody's going to take a deep breath. They're going to look at U.S. economic conditions. They're going to go, hey, the jobs in the U.S. are still good. Hey, GDP came out at 2.3%, which incidentally, I think the jobs report next week will be pretty decent. Initial jobless claims came in at 207,000 this week. That's a low number. So I think the jobs report could actually be pretty decent. We still have mega cap tech earnings. We still got a lot of earnings coming out. We've got Google and Amazon are both going to be reporting this week. General reaction to mega cap tech stocks was mixed, really didn't push the market higher or lower. I will say one thing about short sellers. So you got these big 7 stocks, and they've fueled the majority of the market move higher over the course of the last couple of years. Well, shorts hate selling ahead of these large mega cap tech earnings because these companies have been able to move the market higher. So there's higher risk in shorting ahead of those earnings releases. Well, now we've got 4 of the 7 already reported last week. So shorts will be more emboldened. They won't have that overhang, and they won't have that worry that the market could scream higher. So that's how I see everything playing out. And I will tell you that Trump loves uncertainty. And when he pushes to one extreme, he's a negotiator. So he will push to the extreme knowing that he wants to negotiate in the middle. And the middle is really what his target is. But the only way for him to really get to that point is to go really extreme initially. And I remember trading some of his comments in 2017, and it would go something along the lines of, oh, China has been ripping us off for decades. I'm going to impose a 50% tariff on China. And the S&P futures would drop 50 points on a 5-minute bar. You just knew, oh God, what did he say now? And so we had the Twitter feeds up and everything, and we're watching it. And so you just lost 50 S&P points. So we had to know every statement he was making, every scheduled press conference we had to be aware of. And the same thing is true now. We need to know when his press conferences are, but he says stuff off the cuff too. And then like 10 minutes later, he would say, well, Xi and I we're pretty good friends. We get along pretty good. Maybe I'll only make the tariffs 20%. And the market would rally back. So this is the kind of price action and volatility that you can expect. And it's probably going to take the market about 6 months to settle in. So he's going to come in like a bull in a china shop. He's going to get all this information out there. He's going to keep everybody off balance. He's going to let people know that he's serious about the things that he wants to change. And then things gradually will start to settle down. But my concern is that this initial news is going to spark a pretty heavy wave of selling over the course of the next week to 2 weeks. And that's going to expose just how poor the macro fundamentals are globally. And instead of people just looking at the market and going, we're near an all-time high. There's nothing to worry about. The jobs are still good. It's going to change the perception of where the market is and where valuations are probably for the next 6 to 8 months. So this is going to have a lasting, lingering effect. So let's take a look at a couple of stocks that I like, and I'll show you how I'd be trading them. So, these are going to be tariff trades. So the fact that that's currently what's in focus and that is what's driving the market, well, that's what we need to be trying to take advantage of. So I've already told you about Tesla. I'm not going to worry about it. I'm not going to leg out of it. I do want to see that this horizontal support level at 375 is holding. I am short the overall market. I believe Tesla is going to be strong relative to the overall market. So my position is hedged. And I'm going to also be looking to maybe take a couple of other short positions, but I am not going to chase. Chasing big drops would not be a good idea. You're also going to see option implied volatilities start to expand. So I'm going to go into my heavy selling list, and I'm going to take a look at Apple. And I like Apple for a couple of reasons as a short. One is the fact that the stock has been able to sell off heartily when the market has been hovering near its all-time high. So last Friday, believe it or not, the market tested the all-time high. So we've only seen 1 day of selling. Apple, well off of its high. They posted earnings. Sales in China were down dramatically, and I believe Apple gets about 20% of its revenue from China. China also wants consumers in China to buy their phones. So what are the odds that they're going to slap some big old tariff on the largest market cap stock in the US? I'd say pretty good. I'd say really good. Okay, well, that's going to impact Apple. And you can see this long red candle. Okay, this is a gigantic bearish engulfing candle post earnings. And Apple tried to rally and tried to rally. And analysts looked at the news and said, oh, well, their revenues for phone sales have been relatively weak, but we like the fact that they're generating a lot more money in the service end of their business. But that long candle is really my focus because it tells me that institutions were in there selling the stock. The fact that it was able to get back below the 50-day moving average, the fact that it's below AVWAP-E, the fact that it's right on that 100-day moving average are all signs to me that this stock wants to move lower. So the 100-day SMA is at 233.63. So if we take a look at a 15-minute chart, you can see there's the earnings after the close, there's the initial reaction, and there's the sell-off that we had Friday. So completely engulfs that previous day's action, and now it is testing that horizontal support level, which is the 100-day moving average. So we are going to come in Monday morning during what I believe is a bloodbath. And I don't know that this is going to happen. The futures aren't going to open for another 5 or 6 hours based on the rhetoric that I'm hearing from other countries, based on the price action that I saw into the close on Friday, based on the overall price action I've been witnessing for the last 2 months. Everything tells me that Monday is going to start off very ugly. So what do I want to see Apple do? Well, I'd like to be able to short Apple, but I'm hoping that I can short it near the 100-day moving average and not down at 225. Because if the stock gets obliterated Monday morning and the stock gaps way the hell down to 225, a lot of my firepower has already been exhausted just based on that gap down. Much of the move has already been realized. So it's just not a good risk reward ratio for me. And then I start having to worry about a possible gap reversal. A gap reversal, if this stock opens $10 lower, that could mean that I have a $5 or $6 or $7 instant bounce on that stock. I don't want that to happen. What I would like to see in Apple is a gradual leak lower down to that 100-day moving average with a big drop in the S&P 500 and a drop instantly through that 50-day moving average. I need to see the S&P 500 through the 50-day moving average first and foremost. That's at 397.32. So I want to see that we are blowing through that 50-day moving average. So it's not even a question of, gee, is there going to be selling or not? Oh, it's bam. This is a wake-up call. So that's the first part of this equation, is I need to see us blow through it. I don't want to open at the 50-day moving average. I want to open 20 points below it easily. And I don't want the market to be able to poke its head up. I want sellers to keep the pressure on constantly. So I'll be looking for an open below the 50-day moving average, long red candle closing on its low, long red candle closing on its low, very little overlap. That will tell me that sellers are in control and that this is going to be a gap and go sell off, probably get to the 100-day moving average. Do you have that exact pattern? Yes. Good. Then we can take a short position. Any other mamby-pamby little bid check of the 50-day moving average with little mixed overlapping candles, and maybe the 50 days is going to break down and maybe it won't and maybe it'll be support. I don't want any of that shit, okay? It has to be this. I can't say that firmly enough because some of you are going to want to see what you want to see, okay? It has to be a big ass breakdown and we need to blow through it. If we do, great. Now we know we've got a good shorting opportunity that's setting up. And if Apple kind of leaks lower to the 100-day moving average and it can't get back above it and it can't get back above it and it's just leaking, it's going to crater and it's going to sell off as long as you've got that market pressure, because you already know from Friday that there are sellers in Apple. You already know from December there are sellers in Apple, okay? This is going to be a bearish flag formation. Sell off, bounce, upward sloping trend line, post earnings, crackdown. That's what I'm looking for. Okay, so Apple, short the stock, do whatever option trades you want. I will only say that when it comes to trading options, if you're trading super short-term options, you're probably going to lose money just because you're going to have time working against you. You're going to have a volatility explosion. So you also have the potential for option implied volatilities to get very inflated, and you're going to be buying them at their peak Monday morning if we get the type of move that I'm thinking we're going to get. So go deep in the money, go a couple months out, look for very high deltas. Don't be buying the options that FOMO Joe is going to be buying Monday morning. Okay, this is a nice tariff trade and it could last for a week, could be 2 weeks, but if we get the type of price action that I'm suspecting, the market's going to rest at the 100-day for maybe a few days and then try and work its way down toward the 200-day moving average. And I believe that sets Apple up for a test of this 220 level, which is where its 200-day moving average is as well. So that's one trade that I would consider. If Apple tanks, we don't have that opportunity, okay? It's gone. Look past it. Find something else. So I'm going to give you another potential stock. LVS. LVS is a post-earnings pop higher. You know I hate LVS. This was a short that I showed you back up in here. I love that crackdown. Blam, that was a great pick. Macau revenues, not good. They are at about 72% of the revenues in Macau that they had before COVID. So we've just spent over 4 years recovering from that virus, and China's activity is so slow that they can't get people back into the casinos. And for LVS and Wynn, actually, WYNN, which has not posted earnings yet, so I would not trade that. And earnings on Wynn are on the 13th. So yeah, they're still a few days away, a couple of weeks away actually. I wouldn't trade Wynn because of the earnings, but you can see how it rallied up to the 200-day moving average, and it also had a bearish engulfing candle. So the news out of China has not been good. LVS, I think, has nice weakness here below the 100-day moving average with a strong rejection. And I did trade this early on Friday. I saw the early selling pressure, and there was that early selling pressure. So I started shorting it up in here. I actually did very well on the stock. Bought some lotto put options on that one. I made about 150% on that, and it also coincided with the market topping out. So that was a nice pick. I think LVS is going to continue to move lower. I would have liked to have seen heavier volume. So that was kind of the missing element on LVS, but I think it's still going to be a decent pick. What would I want to see in LVS? I would want to see it stay below this 200-day moving average, that black line right there, and ideally it doesn't crater right on the open, but it ticks lower, and it gives us a chance to enter that trade. Again, this is based on the notion it is tariff related, because if we start getting into a tit for tat trade war with China, I think China's already so weak that any additional weakness is going to push it over the edge, and those revenues in Macau have already been dropping steeply. LVS, their other large property that they make a lot of money on, is in Singapore. Singapore is very dependent on China for its revenues. I believe about 17-18% of their economy is dependent on growth in China. So LVS, I think this is another very nice shorting opportunity. I did notice one other stock. I ran some searches, and it's not one I'm going to be doing follow-up on, but PII was a stock that caught my attention. It doesn't have very liquid options, but you can see how this stock has been dropping since earnings, and in general, it's had a very steady decline. So for a day trade, if Polaris opens close to where it closed Friday, you aren't reaching for it, I think that's going to be a nice one, and you can expect to see it continue to drift lower. So they sell ATVs, they still sell snowmobiles, so recreational vehicles. Obviously, recreational vehicle demand has been dropping. Big ticket item purchases have been dropping, be it homes, be it cars, be it Polaris, be it Harley Davidson motorcycles. All those big ticket items, consumers have been cutting back. Interest rates remain high. So those stocks, I don't know if I mentioned Whirlpool, but yeah, appliances. Those stocks in general have been weak. And let's take one more look here, more of an afterthought. Best Buy is probably going to be impacted that, although to a lesser degree, because they don't sell that many big ticket home appliances. So, but yes, Whirlpool, WHR, let's take a quick look at that. And you can see there, there's the post-earnings reaction. Not good. Also very dependent on new home sales. You need appliances for that. So The picks that I really like Apple. I think Apple, if you've got an opportunity to buy it just as it's starting to crack down, I would take that trade, but I would not chase it if it blows through that 100-day moving average. Then you're going to have to keep an eye on LVS or possibly PII. But those are the stocks that I'm going to be following up with. I am going to try and do a video towards the end of the week, maybe on Wednesday. I'll keep it short. We'll see how everything plays out. So again, big sell-off Monday, probably not a lot going on Tuesday, possible follow-through on Wednesday. So I'll try and do my video that day. This is how the tariffs are setting up right now. I think these tariff trades could be huge. I think we're going to see follow-through on them. I think that you're going to hear a lot of really nasty, ugly rhetoric coming from many different countries. Trump is a bully. We're not going to put up with it. You think you can raise tariffs on us? We're going to raise tariffs on you. And there's going to be a battle royale. So it's going to be a very interesting week. But we've already seen the warning signs. They've been out there for a long time. So, my God, this tariff news should have been expected. This is not a surprise. You should have been expecting this. If you plan ahead and you look at the behavior and you look at the news, look at the price action, you're going to be prepared for these moves. You're going to know exactly what to do when those events come to a head, just like we did on Friday. We're just waiting for that confirmation that another high is in, waiting for that confirmation that there's a sell-off on heavy volume, and we got it. So we'll see how everything plays out Monday. Don't force trades. Okay, it's the worst thing that you can possibly do, and I probably should mention, if you're stuck in a long position on a trade, hopefully you're in a really, really good, strong stock. You're going to take a beating on Monday. So maybe there's a way for you to hedge that position, and you can hedge using S&P futures. I would not want to do it with options because I think those option implied volatilities are going to be juiced on the open. Those bid-ask spreads are going to be super wide, but I think that you'll have an opportunity to short some stocks. Okay, it's a good way to hedge your long positions, is to take some short positions. And if you picked really good, strong stocks that you're in, those should hold up relatively well. So you're still long the strong, short the weak. That will help you mitigate some of those losses. And then perhaps Tuesday there's a little bounce that'll provide you with an opportunity to unwind them. But in general, I think this is the first crack of the leg lower. And I believe that from this point forward, we're going to start to see some economic softness in the U.S. And I believe we're going to start spending more time below these major moving averages. So that's how I'll be trading it. Thanks so much for watching, everyone. Trade well. Please leave your comments. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.